So in this video here, we're going to talk about a pretty unique trading tool that can help you spot some opportunities. And we're going to talk about the moving average envelopes, what they are, how to use them. Now, these envelopes, they're just all about smoothing the data and finding trends in price. But here's the twist. The envelope adds a margin both above and below the moving average line. This is going to help you filter out those false signals and uncover some better trading opportunities. Now, the averages, these are pretty straightforward. They're just lines plotted at a certain percentage above and below a moving average. And guess what? They're really good for visually spotting potential buying and selling signals. So when the price goes above the upper envelope, it could mean it's overbought. And that could signal a potential sell. On the flip side of that, if the price dips below the lower envelope, it could indicate an oversold condition and a potential buy signal. But you don't want to just jump into a trade based only on those conditions, okay? You do need a setup. So why should we even care about moving averages? Because I think they're pretty awesome at smoothing out data and really pointing out the price trend. But here's the thing. What if the price is just bouncing around within those bands? And let's not forget whipsaw trades where that price keeps crossing around the moving average, right? When you see that, when it's bouncing around within those bands, you stand aside. But we can overcome those challenges. So to really increase the usage of the envelope, consider mixing in some other indicators, RSI or MACD. So I want you to imagine you've been using the envelopes to identify potential buying and selling signals, but you decided you need more confirmation and you need a bit more accuracy. So let's talk about the RSI. It's just a momentum oscillator. It measures the speed and change of price movements. Now it ranges from 0 to 100, and generally the value of 70 indicates an overbought, and values below 30 are oversold. You can change those. Some people do. So let's say you see price touching the upper envelope and the RSI is now above 70. Well, that's confirmation that we could see an overbought condition. You could also think about using tighter or wider envelopes for short-term reversals and counter-trend trading. But just remember, discipline is always your best friend. You got to have a trading plan. But before we wrap up, can't forget the risks, right? You can get false signals like anything else. Your entries could be delayed. The risks are present of losing more profits on trades gone south. It happens, right? It's about managing risks. So wrapping this up, when you use these envelopes into your strategy, I think it can really help identify trends, can help you avoid false signals. With a bit of discipline, you can actually use them to your advantage. But you got to remember that trading involves risk. Okay, so you got to tread really carefully when you're trading. Anyways, there you have it. Give them a try. Let me know what you think in the comments. We'll talk to you soon.